Is the Calgary real estate market going to experience a crash in 2025? Well, I highly doubt it. But are we going to see year-over-year price declines in the next few months as we combat those May, June highs of last year? Probably, but I'm imagining that Calgary is still fairly well positioned to see some slow growth going over the next couple of years. Lots of uncertainty in the air with politics. There's a lot of things that we just don't know what's going to happen. But I still have confidence that the Calgary real estate market is going to hold strong. Look at this month here. We've actually just seen a price increase, and there's some pretty large price increases in certain communities in Calgary, and we're going to get into that in a moment. But my name is Adam Fyfe, your Calgary Realtor. I have tried very hard to make this channel as valuable to you as possible. If you go and you actually click these links, there's a few things for you here. For those of you who are interested in the market reports and they want to read the PDF on their own, you can actually go here, click this, and this is the edited file that I have actually created and uploaded to my Google Drive. You can book a call if you want to have a conversation. There is an auto home evaluation tool here if you want, as well as some top 10 things to do in Calgary. This is updated on a weekly basis, so if you're just looking for things to do around the city, go ahead, click the link for the top things to do in Calgary, and go and have some fun. So let's get into this. Now, with sales down, new listings up, inventory up, and months of supply up, it's obvious that we're seeing a slowdown in the market. You can see from last year a super hot seller's market of 1.1 months of supply. This year, we're at 2.4. Still leaning in the seller's direction, but definitely in that balanced area. Inventory up 75%. There's almost 4,200 units left over at the end of the month, allowing options for buyers. When you start to look at the sales, you've seen that we're down 20%. And new listings are up around 4%. So clearly the market is slowing down, but is it slowing down in all areas and all property types? That's what we want to actually break down here. Too many people see these high-level overviews and they think everything is falling apart, but I can tell you if you stick to the end, you're going to notice some crazy stuff going on in the detached market. If you want to read this on your own, pause, go to the next chapter. I'm not offended. If you want to hear my storytelling, let's get after it. Sales remain above long-term trends despite declines. For the second month in a row, inventory levels saw substantial year-over-year growth, rising by 76% to almost 4,200 units in February. While inventory increases were seen across all price ranges, the largest increases were homes priced under $500,000. This increase was driven by substantial growth in the more affordable apartment and row townhouse sectors. The overall months of supply was 2.4, similar to last month, but more than double this time last year. Apartment-style units remain the most well-supplied at 3.1 months of supply. There were 1,700 sales in February, which was above historical averages for the month, but 19% lower than levels last year and significantly lower than the record levels seen in post-pandemic period. New listings in February reached over 2,800, roughly in line with historical averages for the month. The sales to listing ratio for the month was 61%, higher than historical averages, but below levels seen in each of the 3 last years. Even though more people listed their homes for sale, there were actually fewer sales than in February 2024. So we're seeing the seller's market of the past 2 or 3 years ease off. In turn, this caused the pace at which prices are increasing to slow down a bit, which should come as welcome news for buyers. So those affordable price ranges, surprisingly, are seeing a lot more inventory. Is that an investor sell-off, right? Is that people looking to move up, right? What's going on here under that $500,000, right? I would imagine there's probably a lot of people trying to offload their properties, especially when they bought the investments in 2021, 2022. Renewals came up, prices have increased dramatically. Now we're seeing that offload, okay? Total residential price in Calgary actually increased by $4,600 from last month. Look at last year, the total residential is only up $2,600 from last year. Now, the total residential price point has its own attributes. So when you actually click on the link, you go to the benchmark attributes section, you go to total residential, composite is for the entire city, okay? Then it breaks it down into all northwest, south, southeast, all that stuff. I've got detached, semi-detached, townhouse, and apartments, all beautifully crafted for you to come in here, see what the attributes are, go back to the PDF file, and actually start to understand what that benchmark actually gets you, okay? One other thing that I've added this month is there was a decrease of the year-over-year growth, right? We're gonna touch on that in a bit, but we're down about 2%. Like last month, it was about 3% year-over-year. This month is 0.9. I wouldn't be a bit surprised if next month it's gonna be inching into the negatives, and we'll touch on that in a bit too. So with that being said, we are seeing an increase in price. Okay, we did see an increase in sales, we saw an increase in inventory, and a small increase in price point, mainly driven by the single family homes in Calgary. There's some massive increases there. You can see that the inventory levels are massively different compared to last year, right? February last year, we had a very tight sales to inventory. We had actually sales outpace inventory in both March and April, right? Clearly indicating that the prices were going to go up at that time, and they did. And then we started to notice that slowdown right through that second half of the year, okay? So this is the exact same information, just in a numerical fashion. The nice thing that I like about this one is it shows the days on market here at 33 days, okay? So it is relatively, it's slower than what we've seen, but it's actually not that bad at all. 33 days on market is still a pretty healthy market. You can see last year, we got all the way down to 19 days, here 20 days. It was a very, very hot market, and we're starting to notice that shift into more balanced territory, okay? Median price actually decreased, and the average price increased compared to January of last month, okay? So, like I said before, we are noticing that year-over-year growth drop pretty dramatically, okay? You can see the last time we saw negative year-over-year growth was in 2020 during the pandemic, right? So we had a pretty crazy, almost 18, 19% year-over-year growth. That was a wild time in 2022. Go back and watch those videos. It was pretty crazy. 2023, everyone thought the market was going to crash. It definitely slowed down in 2022, but then it had a little bit of a rebound there, up to 10%. Now we're going to start to see how far into the negatives we go. I don't think they're going to stay there very long, but I would imagine for about 2 to 3 months, maybe 4 months, we'll probably see some negative year-over-year growth as we battle against these highs that we saw last year. So if we actually outpace the highs, then obviously we're going to get into some more year-over-year growth, but I would imagine we're probably going to see some negatives coming up in the next few months, okay? So let's start to break this down, okay? We're looking at the sales here. City of Calgary, year-to-date sales, it's February. So this is March now, but this is February data. You can see that we have a pretty large decline from last year, but still above that 10-year average. 2022, absolutely wild roller coaster of a year. A lot of people were, Alberta's Calling campaign from the provincial government absolutely excelled, and we had a lot of activity. Now we're still above 3,000 units for sale. And it's relatively healthy, okay? We start to break this down into the price points. So this is a year-over-year comparison over the last 4 years. You can see the red line is 2025. Again, 2022 is the blue. That's a pretty wild stat to compare to. So you can see that, there's the 300s, the 400s, the 500s. Everything is lower than what it was last year, but up for the most part compared to 2023. You can't even talk about 2022, okay? So sales by price range is the exact same information, but now we're starting to break it down. So like in the 300,000s, you can see that there was the most amount of sales, and you can see that the city center block here, the purple, has had the most amount of sales in general in the entire city. It looks like the $600,000 price range in South also saw a very large amount of sales. It's quite a large quadrant, but it's still very active, right? So well, the new listings, we need to make sure that we understand what's going on here. And we have consistently seen, this graph's perfect, the increase of new listings every single year. And I would imagine we're going to get to a point where the inventory goes into more of a buyer's territory, which it pretty much already is. It's more balanced, kind of still in the seller's favor, but we're going to pretty quickly go into a buyer's market here. Which is a good thing, right? We want to see more listings. We want to see more stuff. We don't want to be Toronto, Vancouver prices. We want to actually have some selection for you buyers who are coming to the market, trying to settle a new life, maybe move up, move down, whatever it is. We want more selection. So it is a very welcoming thing to see. And we just got to keep track of where all the inventory is. Is it all in one quadrant? Is it all over the city? That's what makes the biggest difference, okay? So with the inventory, we are the highest that we've been in the last 4 years, so which is excellent news. You can see that in February, we have over 4,000 homes left over at the end of the month, which is awesome, right? Last year, February of 2023 and February 24, that's just stressful, right? Yes, of course, some people can really capitalize on those markets, but that is a very stressful time to be a buyer, a seller, a realtor, a professional in the industry. That's like a subsidiary, I can't say the word, of real estate, like a lawyer, property inspectors, mortgage brokers, all that. It was very, very stressful. It's overwhelming for sure. So it is good to see that the inventory levels are increasing. You can see in 2019, 2016, we've had the most amount of 6,000. It'll be interesting to see if we ever get back up to that number this year or in the next couple of years, but just subscribe to the channel and we'll follow it along. So total inventory by price range, you can see that the $300,000, like mentioned in that original write-up, has the most amount of inventory. So you can see the city center has a pretty large chunk of inventory. all apartments, right? And they have been making apartments like crazy in Calgary. One thing that I've called out over the years is that Calgary goes through this wild boom bust cycle with apartments. There are apartments still that have not reached 2007 prices. I have examples for those of you who want to see them, but it's crazy to see how high the apartments go in price and then how quickly they drop, because Calgary goes through these crazy boom busts where we see a lot of people come and rush to the market, they soak up our inventory, and then we put a lot more inventory back on the market. Our city's always expanding, right? We've always got new options for people, newer buildings in the suburbs. So it really does stabilize that price point, and we don't really see the highs of highs that we used to see in like 2007, 2008, 2012, and 2013, right? Pretty crazy stuff. So with that being said, it's obvious Calgary is starting to slow down. The months of supply is increasing. We're definitely going in towards more of a balanced territory. I would say we're in balanced territory now, still leaning towards a seller. Those people who price it correctly and actually market it properly, the seller still does have the benefit. But there is a lot more inventory for those buyers who are patient and willing to look at stuff that's been on the market a little bit longer and actually have some negotiation tactics on what they want to do to win. So with that being said, this is the months of supply, and you could see that the semi-detached, for whatever reason, in East Calgary is at like 8 months. Okay, we got to dive into that. Why is it at 8 months? Because semi-detached in East Calgary are the most affordable, fee simple lots basically in Calgary, but there's a lot of inventory there. You can see that everything else, at least in the detached sector, is hovering around 2.5, 3. You still have northwest and south under 2 months. You've got semi-detached in northwest under 1 month, which is again still a strong seller's market. You've got apartments in northeast Calgary going over 5 months. So if you're trying to sell an apartment in northeast Calgary, you absolutely make sure that you are pricing that correctly. If you're looking to buy an apartment in northeast Calgary, do your research, take your time, look at all the options that you have, and go and try to find something that is best suited for you, right? You're a buyer, of an investor, whoever you are, right? There should be a lot of options. You've got semi-detached again, 2 months. Townhouse, 2 months, still a seller's market in my opinion, but we are inching in towards that balanced territory, especially if you mismarket it or you misprice it, thinking that we're going to price it at June of last year prices. It's just not going to work, right? We got to make sure that we're staying hyper local. We're looking at the market. Where am I here? We got to make sure we're going into the market. We're looking at things that have actually sold, what's being listed, what's the competition, and what can we realistically expect for that price. As an example, this is not planned by any stretch, but you can see, an affordable home in Coventry Hills, $549, it's already pending within 2 days, right? Mackenzie Town, single attached garage. I don't exactly know what this is. Oh, it's a townhouse, $429 pending within 3 days, right? Ogden, same thing, $599. We've got another one, Whitehorn, Parkland, right? These things, there's stuff that's still pending relatively fast, right? Even a Bridalwood, $750, pending within 3 days, semi-detached, right? Probably a pretty nice semi-detached home. Either way, do your research, don't rely on these reports, and actually take action. So if you want to read what the Calgary Real Estate Board has written about each individual property type, go ahead and pause the video and read it here. I don't know what I'm saying now. Let's start to break this down and start to look at the property types that are available in Calgary. So we've already touched on the total residential. We don't need to touch on that anymore. Single family homes have seen a $9,700 increase from last month, right? They're still up $40,000 from last year. We did see an almost 2% drop from the year over year percentage last month, right? We're starting to go lower in the year over year percentages, but we're still seeing some price decreases. Now, winter slups are a real thing. December, January, always see price decreases. So this is not a surprise to me, to be honest. You're kind of just rebounding to where it was before the Christmas holidays. Semi-detached, 10 grand, right? The townhouse only saw 1,900 and an apartment only saw 2,800. So we're still seeing increases in the city. We're seeing some pretty large increases in the single family in the single family sector about what's going on there. So I am tripping over my own words here. So this is a breakdown for each individual property type. I'm not going to really touch on this, to be honest with you. It's good numbers if you are interested in the overall market, right? It is interesting to see what's happening in February, what's happening year to date. But I truly believe that you need to break this down into local sectors to actually get a better picture. But for those of you who are interested in what your home is valued at, thank you so much to everyone who's actually done this. This is crazy. I have not called 90% of you. I need to absolutely get on that. So please don't be surprised if I say hello. But very first link here, instant home evaluation tool. It's super, super slick. You click it, put in your home evaluation. You actually go and it gives you a price very, very quickly. So for those of you who have done it, thank you. For those of you who are trusting me to provide them with insight, that is amazing. So let's start to break this down into into the individual quadrants, right? Like I said before, I'm just going to make this a little bit bigger. There are some pretty large decreases in the single family market here. If we look at single family homes in Southeast, South, Northwest, North, and City Center, they all saw over $10,000 increase month over month. Last month, Northwest also saw a $40,000 increase. So in 2 months, the benchmark attributes, which are here for Northwest, if you go to detached, you go to Northwest. So these benchmark attributes here, a house built in 1992, has seen a $40,000 increase in 60 days. Okay, so the market is not that slow. Okay, I understand that there's a lot of news outlets, there's a lot of uncertainty that's going on with political figures and whatnot, but there is still a lot of movement in this market. So don't be fooled by some of the reports that you read online. You have to break it down into the individual property types. You can see apartments basically saw decreases across the board, minus City Center surprisingly saw an increase. You can see semi-detached, again, 15, 12, 13, 9.5, 9.9, 9.8, right? They saw increases all across the city, again, getting out of that winter slump. The weather's also been quite warm here too, which is probably helping with these price increases. Townhouses, surprisingly, are not seeing the biggest increases. You can see Northeast saw a $7,500 increase, right? 43, 39, 64 in South. So there is still pockets in Calgary that are seeing price increases, and I would imagine that's going to stay fairly consistent throughout the year. We're probably not going to see $40,000 increases every single month, or every $20,000 every single month, but we're probably going to notice some increases going throughout the city. Now, the year-over-year marks are very interesting. I actually saw, if I go back to the report here, I actually saw my first full quarter decrease, right? This is total residential for North and total residential for City Center. This is the first time I've seen a decrease year over year in like 3 years. So we are starting to know some differences here. Again, total residential is everything combined, especially in the entire quadrant. It's just not a good parameter to try to share with people. In a sense, you want to actually look at all these numbers: the sales and new listings ratio, the inventory, the months of supply, what's going on in these markets. Again, like 1.68 months of supply for Northwest. It might be a little hard to find a good price single family home in Northwest right now. So just be aware of that and prepare for that. Okay. Like mentioned, we're probably going to dip down to the negatives of year-over-year price growth. That's my assumption. I would imagine we're probably going to just touch it for like a couple of months, if not a few months, and we'll most likely see some slight, 1 to 3% year-over-year growth going throughout 2025. I think that's an unpopular opinion, but I just don't see the crash, right? The amount of negative comments I get from people is amazing about how they think the real estate market's going to crash. It needs to crash. It has to crash, right? They said that about Toronto and Vancouver for years. Now, Canada is in an absolute mess. Our debt to ratio, our GDP growth is disgusting, and there's a lot of things going on in the federal level that just doesn't make sense to me. And I think there's a lot of uncertainty in the air about that. We'll see what happens with the election. We'll see if they actually make some good policy decisions and, re-stir some confidence in the country and bring back investment. But I guess we'll just have to wait and see for those elections. So with that in mind, you can see we've slightly ticked up, like we've talked about. I would imagine we're not going to get to, like, at this mark here, we probably won't reach that. I guess it really depends on the weather. It really depends on how active people are, how aggressive those tariffs are going to be, how much the interest rates are going to fall. There's a lot of things that are uncertain right now. So if you want my honest opinion and you just want to chat about things, go ahead and book a call or just text me, right? At the end of the day, I feel like I'm very level-headed in my advice and how I actually talk to people and what you can expect if you're actually planning on getting into the market, but every situation is very different. So thank you very much for everyone who's stuck on this for almost 20 minutes. I really appreciate I really appreciate you for watching the video. Throw a comment, ask a question. More than happy to answer those for you. And we'll see you in a couple of days when we break down single-family homes. Peace.